Hi, this is Wayne Blau. One of the main things that every business owner needs to know is how much do I need to sell in order to pay my overhead? All right, what's my nut? What is it I need to come up with to keep the doors open? It's pretty much simple. I mean, I have fixed costs, and I have a list of them down here that I have to pay every month, no matter what. That's why they're called overhead. Bad joke coming because they're hanging over your head, no matter what, like an anvil ready to drop on you if you don't have enough sales. So how do I calculate how much sales I need? Well, the first thing is understanding is that there's two types of cost in any business. What's called a fixed cost. In other words, costs like rent expense, utilities, telephone, property taxes, office salaries, the owner's salary, payroll taxes on those salaries, and all the other overhead costs and little stuff that comes in during the month. That's going to come in every month, whether I have a sale, 1,000 sales, 100 sales, or no sales. All right. And then I need to know what my variable costs are. Now, a variable cost I only incur when I sell a unit. Now, a unit can be a unit like something tangible, like, a cane, a keyboard, a meal, or it can be something intangible like a unit an hour. Like if you're in consulting or doing tax returns like I am, I pay people to do the work. That cost for doing the work is my labor. So it's usually in these two areas, material and labor. And these items I only have if myself, if I don't have any tax returns, I don't need any staff. It's pretty much simple. Now I'm still going to have all these costs, but I don't need to worry about material. If I have a restaurant that doesn't get any customers, I'm probably, got a minimal amount I'm going to have, but I don't need a whole lot of material and staff. If I'm a construction company and I don't have any jobs, I'm not going to order anything, but I'm still going to have these monthly costs. So how do you figure out what you need to sell to break even? Well, you need a few things you need to know. First of all, you need to know the average unit sales price. And for my example, I'm going to use $100. Then you need to know how much for this $100 item, how much is the materials, $40 in my example, how much is the labor, $20 in my example, for a total variable cost of $60. Because this is the key number you're looking for. How much do I make for each item I sell? All right. Because that's how much is available for each item to pay this $8,650 worth of fixed cost I have. So doing the math is easy. All I'm going to do is I'm going to take my total fixed cost, $8,650 plus B24, and divide it by my gross profit per unit of $40. That means to break even for this month, I need to sell $216 worth, 216.25 units. Now, if that's hours, that's how many hours I need to do. If it's units, that's how many units. I mean, whatever I'm selling. All right, that's how you calculate it. Now you prove you're right by doing a simple little financial statement. I'm going to take $100 per unit times 216. There's my 100 times 216, $21,625 in sales. My variable cost, the same 216.25 units times my total variable cost of $60. That's the total material and labor. Gets me a total variable cost 12,975, a gross profit of 8,650, subtract my fixed costs, same, and a break even by its very nature means I didn't make any money, I didn't lose any money, I just kind of was on a treadmill running in place. Now, if I want to make a profit, I need to sell more than that. If I'm losing money, I obviously sold less than that. All right. So when you're setting your target, you decide how much you want to make. So here's another thing you can do. You can easily say, all right, I want my profit to be, I want for each month, I want a $20,000 net profit. And this is the profit I want. Uh, all right. Now what I can do is I take the fixed cost plus variable costs, I'm sorry, plus profit. I can do this. Profit needed. All right. I can type, really, I can. Divide that by, all right, my gross profit per unit. All right. So in English, the formula would look like this. My fixed costs, oops, let's tell it we're going to do this. All right. My fixed costs plus the profit I want, all right, divided by the gross profit per unit. So I need to sell 716 units. So now this is break even. Let's show you break even. All right, and let's just make it look pretty. All right, and this is to make this, let's call this 20K profit. All right, and let's cut it there. I don't like it there. Let's put it here, and you see what we're doing. Now, let's do this. What I need to do is sell 716 units. And what we're doing is we're just proving this actually works. So let's take the 716 units times my $100 sales price. And let's just take these and move them over a little bit. All right. Let's take my 716 units times my variable cost. All right. And we're just going to copy these because they're going to be the same. Going to be a formula. Look at that. Made a little bit more. Oops, because I forgot to do something. I was going to say, there you go. As I forgot to put in. Alright, and let's just move this, make it look the same. See how easy that is. So I can not only tell what my break even is, but if I want to make a certain profit, I can calculate how many units I need to sell. This is necessary for every business owner to understand and to master. So until next time, this is Wayne Belisle saying let's make this our most profitable year ever. Thank you very much.